guys? Hope everyone's having a great Sunday. Just doing a video off the cuff here. I didn't really prepare for this one, so sorry in advance if it's sloppy. I just wanted to give a BTC update because we're in a critical area here. Alright, so this is the weekly profile. I have everything kind of organized here, but you can see on the weekly we took the external previous all-time high at 69k. We rebalanced here, engineered some more liquidity on the daily, and then we filled and rebalanced this weekly. So we have one more weekly internal over here, which we could reach for next. But I'd imagine before we do that, there's this dealing range over here, and we should get some sort of corrective retrace at least to the middle of the dealing range before we nuke to the final internal range over here. So that's your weekly. We'll pop it into daily next, just so we can see on multiple time frames what's going on. All right, so here's the daily. If I just add this back in, you can see there's all this engineered liquidity on the way down. And inside of the weekly imbalance over here, we basically took order block stops here. So a lot of people looked at this as daily demand, and you could see they entered over here, front ran it a bit, and this wick basically flushed everything out here, including resting bids that had order block stops below it. So the way I'm sizing up the daily the daily chart, you have a short-term low, potential long-term low, and over here maybe another short-term low, basically reclaiming this short-term low. So as long as we don't close below that previous short-term low, this might be the Bolkowski reversal structure on the daily you're looking for to trade up into these engineered highs. So that's something on the daily to pay attention to. We'll pop it into the 4 hour next. So in the 4 hour, I have multiple dealing ranges, right? So this is the daily dealing range. Basically from this high that took out these highs into this low. That's your daily dealing range, marked in by this premium discount fib. And then you have your 4 hour dealing range, which is basically this high that rebalanced this and took the internal range into this low. So that's your 4 hour dealing range. So within the daily dealing range, I'm looking for price to get into 58.7 before there's any substantial impulse down. I feel like we blew out quite a bit on the last Friday's drop and the entire week. So I think there's a mean reversion play or a mean reversion trade in action right now. Even within the 4 hour chart, you would expect price to trade into this 4 hour dealing range mid, at least equilibrium, which would be above this high. And then you could see there's some liquidity in the range to target as well, which if you pop in the 1 hour chart, you have 1 hour highs here, and then you have 4 hour equal highs up there. So those would be basically in deep premium within the deep premium within the 4 hour dealing range, and they would be just entering equilibrium and slightly above equilibrium on the daily dealing range. So this zone right here is essentially what I'd be targeting on higher time frame. Back into 4 hour, you could see there's an external low that we formed here on Monday, August 5th. And obviously we're drawing into it, right? So even though we took this internal liquidity arc into here and showed some strength in this wick, I don't think this 4 hour sell program is complete. It began up here above these highs. So you had a ton of engineered highs over here that got flushed, and then you had order pairing above those highs, then breaking structure below these lows. So as of now, you basically have one distribution, two, and I think we're forming our third distribution with this setup for either Monday, Tuesday, or Wednesday a continuation purge of these highs. So it could happen anytime, but the reason I'm thinking that's a good area to target is you have your daily imbalance up there. So essentially after you took the internal lows, now you're looking to drop into the daily imbalance above these highs, which is why I'm thinking this is going to be our continuation purge, somewhere in there. I think this sell program won't complete until we hit minimum 51.5 and retest this demand zone, and I'll show you why I think that's the area to be targeting. So you have a pretty good wave structure in the zone. You have your impulse corrective wave into 50% higher high over here at the 113. That's where your liquidity profile started to sell off. So naturally you're going to be targeting a shark at the 886 with the 1618 projection of B to C. So that would land you in a very tight potential reversal zone over here. And that aligns with a fib zone that I've marked out as well. So if we go into lower time frame, 15 minutes, you can see we established a order block in this range. So I'm treating essentially after we wicked into this low and completed this sell program, we had this move up and then a drop down. That drop down, this whole block here, I'm considering an order block or a point of interest. And within it, I'm mapping the volume from the high to the low. And then in the red box here, you have basically an area of volume that I think would be acting as support if we came down to it. And it's basically denoted by the value area high within this session and the point of control where the highest volume was traded. So I think this area is going to be very sensitive, and when you zoom out, it aligns pretty cleanly with the shark. So you can see my fibs here from the swing low to the swing high. You have a 786 to 886 in this range, and that volume node is going to be somewhere in the center of it. And then if you focus on this area right here, we'll drop it into low time frame. Come on, fucker, wake up, man. No rest. Sunday, it's degenerate gambles time. Let's go. So in this range, you could probably use the 15-minute just for a cleaner manipulation leg. So from that wick, which basically reclaimed that previous low way over there, you can see we had a pretty good bounce going into the weekend. Obviously after a full week sell-off, there's going to be some sort of mean reversion, and they stopped the volume right below the daily imbalance. So this looks to me like seller inducement. I'm in from a long down here, and I'll show you guys more or less where I started to long. I have a couple of positions down here, but the idea would be to set your standard deviations from where this wick started over here and the buy pressure went up, taking out the internal range over there. And if you project it out, your -2 to 2.5 lines up with the 886 of that harmonic, and it could drop all the way to the -4 potentially, which would basically flush this entire range and align really nicely with demand down here and the 886. So I'm looking for a potential like proper reversal in that range. And if you map it to the 4-hour, your -2 to 2.5 sits in that high volume node. Your potential reversal zone for the harmonic is slightly below that, around the 886. And I just, I mapped the potential reversal all the way down to the -5 standard deviation from the highs below this low. So anywhere in this zone, I'm looking for a reversal, basically starting up here in the high volume node all the way to below this X point, where I think that's the extreme low we'll get in this next drop. So this will be for the larger long, but I think that's where the buy sell program will complete within the range. So this is the sell program, distribute 1, 2, and I honestly think this is developing a third distribution like here. And there's a trade called the silver bullet, where basically on the final stage reaccumulation or redistribution, you form or you engineer liquidity at the highs over here, and then you basically purge everyone before the final drop, which is usually a very fast accelerated move to the target, maybe below this low. So I think this is where the 4-hour sell program is going to complete. It might have already here, we don't know, but for it to be completed over here, I'd like to see the daily imbalance here be inverted. So essentially on the daily, I want to see it close above the imbalance, pull back into it, and then use this as support to potentially go long. And that would be like a giga long for me. So I mean, it's if this then that, right? If it inverts the daily imbalance over here, then I'm looking at long minimum to this original consolidation with some higher liquidity targets potentially. If not, if it rejects that and it continues to reject the daily imbalance, then that bearish imbalance is going to hold and likely push liquidity again into the external low. So remember, with MMXMs, the market or the liquidity cycle is going to be internal range. It's going to either rebalance the internal range and then seek the external low, or it's going to take the external low and then seek the imbalance. So that's pretty much my thesis in the range on high time frame. This is the range which I'm in a trade actively. Basically that's your 15-minute dealing range. Here's the 2 to 2.5 standard deviation from the manipulation low right here. So starting with this up candle that rebalanced here to that low, if we map it, the standard deviations would take it into premium between -2 and 2.5 above these highs. And if we get a continuation purge, that's essentially what I'm looking for. Basically a deviation into there and then drop it down. So that's the current trade I'm in. I got in from a, like a 1-minute inversion over here after we ran some liquidity at the lows. And then the second entry, I took another one below these lows right here. Damn, stomach's grumbling. I gotta eat something soon. So you could see there's some liquidity in here, some in here, and then basically I took a scalp long from there, which is essentially between this low and that high. That would have been in discount within the dealing range. So you basically had an order block, these last down candles before shifting structure above this previous high, and then you had liquidity, like inducement liquidity there. Plus, if you map it from this low to the manipulation high, that sat between the -2 to 2.5 standard deviation. So my thesis on the scalp is take it into the purge over here, maybe extend it out into there, the basically the daily imbalance, and I would close somewhere in here if there was weakness. So that's the scalp I'm in. Already looked over the harmonic. And the last thing, if we hit this area of interest, so where I'm thinking the actual buy program is going to start down here, we have a larger wave structure to watch out for. And this is the one that could actually take us to new highs. So I would be trading, go into the 4 hour, it's probably a bit cleaner. I'm looking to trade this bearish butterfly, even though the price is going up and it's called a bearish butterfly. It doesn't make sense, but it just means that when it hits the target, the potential reversal zone, that it's going to reverse. So that's why it's bearish. First impulse, you're looking for 786. Obviously this one didn't quite hit it, but it's within the tolerance ratio, right? 3% is reasonable. So 786, it's 2%. So that's within my tolerance for that trade or potential trade. This one hit almost the 786 to the lows, which is why the buy program might already be activated. I'm not sure. It did take internal lows right here. So if you go into lower time frame, those were equal lows right there. So that's why it's if this then that. Anyone who's so certain of where the price is going next really isn't a trader. You know, they're just an analyst. They don't actually take trades, because if you're a real trader, you have invalidations and you have a plan A, B, and C. It's kind of like chess. If my opponent makes this move, how am I going to react? I don't know what his move is in advance, but I do know if he does this, I'm going to do that. And that's how we're mapping our trades. Basically, if price is going to do this, I don't know it's going to do this, but if it does drop into this zone here, I have a strategy to take a long in that range. If it, you know, closes above the daily imbalance and it holds when it pulls back, I have a different strategy to long inside of that imbalance to the highs over here. And basically this harmonic is going to line up after a 786 and then a 786 impulse down again. You're looking to project to the 1272 of the overall harmonic range. So that check mark. And then basically your projection wave is from B, the midpoint, to C. You're projecting to the 290 or up to the 261A. In this case, it has a pretty wide reversal zone, but that is where I would expect, after all these highs get rinsed, that would be a good area to watch for price action develop. Essentially, if you go into price discovery above a crazy, like how many months was this range? This was probably like 3 months. We've been in this stupid range. No, half a year. I'm an idiot. I'm retarded. I just proved it. Half a year in this range. So if we do end up having this push on the harmonic and we break above this high, you want to see follow through. You know, it shouldn't just pause and then linger, because that usually means this is going to be a deviation and they just took liquidity to go with the intention to go much lower. If we break out and you see every dip on the 5-minute chart is getting bought up and new order blocks are forming, then you know this is a real breakout, and you can just hold the trade until there is exhaustion. But if it does reverse, or it shows, you know, unwillingness to just keep, like bidders are unwilling to keep max bidding in all-time highs, then I would say that's a sign of weakness and I would collapse the trade at D. So we'll see where this develops to, but this is my high time frame thesis. I have multiple trades within the range, and that includes scalps and gigalongs, right? So we'll see what the market offers this week. One thing I shared in the Discord is Gann's rules. His second rule is if we have the low of the week on Friday, and it was basically aggressive selling into the end of the week, usually more often than not we open with a bloody Monday and there's going to be continuation of selling. So you want to watch futures open tonight, it's Sunday night, and see if there's any clues that we're going to open high, low close. And if we do have aggressive selling on Monday on New York Open, then, you know, any longs you're in, you're going to want to take profit and just kind of either look to enter shorts whenever you retrace within a dealing range, or just stay sideline and let the market do its thing, collapse, and then wait for turbo bids to come back in. All right, guys, enjoy your Sunday. Cheers.